Howdy fellas, it is the 19th of March at about 7:30 p.m. Central Time. We can see these 1, 2, 3 bottom formation here in ADA setting up. And I want to do alerts for all of these. And at the same time, when I am creating these alerts, they'll turn out to be, a 1, 2, 3 bottom formation. We buy on the breakout and that we put our stop loss down below the number 3 point. And statistics show that the 4-hour exponential moving average breakout, these 1, 2, 3s on the 4-hour time frame, are very often fake out breakouts. Sometimes they are not, and they turn out to be a really good entry, but many times they turn out to be a fake out breakout that comes up into this range and then pulls back and touches below the stop loss. It gathers and then it breaks out higher. And when we take a look at this in the longer time frame, we see that it really matches out to a 1, 2, 3 bottom on the 12-hour time frame. That the 4-hour breakout often is a mean reversion trade. And so when we are considering trading a 4-hour breakout, it is vitally important that we start out small. Second, the moment the trade is triggered and you are into stage 2 of the trade, then you want to get your stop loss above your entry as soon as you can. Because if it does a mean reversion and comes back against you, you need to protect yourself really closely on these kind of trades. There'll be time for a reset back in on the 12-hour EMA if the 4-hour EMA doesn't get in. So small trades here. And when it does get in, we're going to be watching for that 4-hour mean reversion. This is the 4-hour. And so the 4-hour mean reversion is, let me get a scribbler, when the price goes outside the third standard deviation and when it comes back in, that's a sell that moment. Of course, it has the same risk control rules as a 1, 2, 3 breakout, but here's one right there that we probably had the 1, 2, 3 setting up looking so good. It was breaking out higher, but it's actually a sell signal, and a really good sell signal many times. This isn't quite as strong. And so as this 1, 2, 3 bottom breaks out, and it does look great, and we could take a position on it, as the prices are coming up, I'll be watching all the way along in these Bollinger Bands to see what happens. And should there be a mean reversion, I'll be talking about it in our chat. So all of these coins now, many of these coins on the 4-hour time frame are coming into formation. That's not pretty enough. We can continue on, and here's one that is coming into a potential 1, 2, 3 bottom on the 4-hour time frame. We've got a nice bottom here. 1, 2, 3. What is it? AGI. So I can go over here to AGI, and same thing. I'm going to be watching for that 4-hour mean reversion as prices are breaking out of this this bottom on this time frame. Same thing, I'm going to be watching for it to mean revert, come back and hit everybody's stop losses, and then up we go. We'll see how this turns out, but I just wanted to give that heads up so that if you are looking at these alerts as they're coming in on the 4-hour time frame, they are the sketchiest and may not be the best strategy. It may be a better strategy to sit aside and actually prepare for the mean reversions, do a sell, and when things come back down here, we could exit our trades and then prepare for the 12-hour EMA. And we wait for the 12-hour EMA so that we are sure that the market is actually turning directions and not just going sideways and whipping sideways. Because then if we are going sideways and we are not trending, then the 4-hour is actually the better strategy to be practicing, so that we are buying on the break below, selling out on the break above. Top and bottom, top and bottom, top and bottom, because it's not going to go anywhere specific, but a lot of top and bottom. So quick video, I'm going to publish this for you, and then I'm going to go through and I'll be doing these alerts. So a grain of salt with all of them. See you in the next one. Ciao for now.